So most of the time in investments, these are the five major common things we have been finding it across, which is a herd mentality. This is a very common things. Most of our customers, whoever it is, they have been coming, and it's not that it's so bad, but yes, I have a one set of friends and customers who are seven people together, and they always come and tell me, Rachna, what my friend has taken, you give it to me the same thing because he's making the good money or he is doing a good returns. You give me the same product and all, and I keep telling him the same thing. See, your friends have a different belief system. He has a different income. He has entered in a different time zone. So his return may be good, your product may be different, your risk and returns appetite is different, your goals are different. But this is very common. So we have been doing in our layout, we maybe more than 15 years we have been working. We have a group of around 8 or 10 we work. So most of the time whenever I have a webinar, the morning I keep having their views, because all of them have come with a very diversified business and the other backgrounds. So I was asking the same thing. I tell, okay, tell me what are the five common mistake you think about it. And the first came the same what I have written. This is, Rachna, whatever my friends and family members says or they do, I always try to do, because I don't know much about it. I am not having aware. I am less time. So I believe that whatever they are doing is also good for me. And this is the one common mistake we have been doing. So I want you to try to understand whenever you are buying or doing any investments. I'm not saying every time that what your friend is doing or your people are doing is wrong, but please try to assess yourself. It is good for you? Is it good for as per your goals, as per your risk, as per your appetite? Please do that part of it. That is the worst thing I wanted to say. So, what is herd mentality all about? It talks about the tendency to follow or copy the other investment doing. That's a very largely influenced by the emotion and instinct. So this is rather than having your analysis or something, you just go ahead as a bias. So this is a very common thing which people are being having it, and that's the one major reason you can say market have the fear or greed or the all the waves, because this moment everybody is making money. Okay, let me also put it across. So just before this I had a 5 to 6 another webinar before this hour, and I somebody asked me the same thing. There's no, everybody is buying crypto, everybody is buying NFT, why you're not telling? I think so that's the best thing, we should do it. I said it may be good for them, but it may not be good for you. Why you are trying to say that if that person is buying, it is good for you also? Because till date, we have not yet started giving a recommendation on crypto, because I said, first of all, we ourselves is not sure how things working, what is a risk, what is a tax implications on those. So we have to understand before we do. But few customer who have come to me and said that, Rachna, you still give, because we are part of those groups. We are the part of few people who are the CXO of those groups. I mean that cryptocurrencies places. And then I ask them, please buy something amount which is becoming not linked to your goals. So even that amount becomes zero, it's not impacted to your portfolio on a goals achievement. If it is become anyway multi currency type for having a multiple fold returns, a bonus to you. So that is the one thing we have to realize. If everybody is doing, it's not necessary it's good for you. So I'll have a small video. Please let me know if you're able to hear.
Familiar with the phrase called herd mentality? We all are victims of it. In 1950s, psychologist Mr. Ash performed the experiment to test the effect of herd mentality on your decision. He called the group of participants and he drew 3 lines and asked them to identify whether an A, B or C is closest in length to line X. Out of all participants, some were actors and told in advance to give the wrong answer purposefully. First, second and third actor gave C as an answer. The actual participants got confused and gave wrong answer just like others, though he knew the right answer. Ash did these experiments with many such groups and found that 75% of the participants gave wrong answer to go along with the group. This is called herd mentality. While investing also, most people get caught into herd mentality and want to invest into hot stock or sector where everyone else is investing. It's human nature to follow others, but when it comes to investing something which is right for everyone else, may not be right for you. On other version of the earlier experiments, when all participants were given a partner, only 5% of them gave the wrong answer. Having someone to advise you decreases the chance of getting caught in herd mentality. To ensure that you don't become the victim of herd mentality and stay on disciplined approach towards investing, call us now.
So this is the one of the biggest bias. We have done a lot of surveys, and this is commonly used. People say that people take a decision to invest on particular stocks or a scheme because people around them. And this is what I did today in my walking also, and which was very, very common behavior, which we find it out to do that. To come and avoid for this behavior, I keep saying that don't put any emotions when you're buying. This is the hard way I have learned myself, but most of us we use the lot of emotions. So the difference between, I can say, advisor and us as an investor is when advisor is saying, okay, this fund is not doing good, even it is a negative, they will just do the loss booking and exit and enter somewhere else. But when we have in our portfolio, we'll say, okay, let me wait for some more time, market may go up. When it is not a loss, then I will do it. Of course, it is a loss aversion bias, but I'm trying to say most of the time, we always add our emotions part of it. So what happens to me, I remembered one of our customer is having a US stock ESOPs, and we gave a trigger around, if I'm not wrong, $158. And she says, no, I am here, I know that it will do very good and all this stuff, internally this, that and all. And I said, maybe fair game, because you are a part of the company, you should know. And she says, no, it is going to go little up. So it is went little 6 to 8 months down, and she sold at $121. So most of the time we try to beat our own thoughts process and try to say that, okay, this is the way I think or other people think, and we don't take, because we add our emotions part of it. So please try not to do that. This is the first common mistake I have noticed, and this is the typical thing I keep telling you this. Herd mentality actually leads to the fear and greed part of it. So if you don't have that fear and greed emotions, you will always have the good investments. I keep telling people, you think about your mother. I'm sure she will always say that when the gold is low, let me go and buy the gold. Why? The simple reason, because if the gold is low, you will get number of more milligrams or grams. The same thing works here. So why don't we do the same point, that whenever the market is low, you should actually buy more, and when the market is actually high, you should book the profit. That is a normal way, but we always go with the herd or people around us. Second is very, very common. Today morning, again, I had a customer. He came and told me, and he's, I can say, the similar age. He was in a CXO in the two different companies. And then I said, why don't you start investing? And he says, no, Rachna, investment is only for the rich people. I don't have enough money. That is the another common thing. I have been doing many webinars. You must have seen, at least last COVID time, I started every Saturday webinar for a public, but normally I used to do last 15 years for all the corporates. Average corporates, I do around 50 in a year. Every time I go to the any corporate, or if I do the induction training time, most of the people I get this answer: investment is for rich, or I don't have a money. But my belief is actually investment is in a behavior and attitude. It is never be about the money. I always feel, and that's what I have taught our kids also, that you start with 1,000. There is nothing wrong, because when you start with 1,000, your habit of 1,000 on a disciplined investment will take you to the 10,000 and a 1 lakh and 10 lakhs or whatever. But if you don't start with 1,000, you will always postpone, and that will not create a power of wealth, or you can say compounding, or a good portfolio. So most of the time, try to make sure that you start. I can bet you none of us is going to change our lifestyle if we start with the 1000 rupees. It's not going to change anything for us. Maybe one outing of going out food, or may not go for a movie or whatever you can think of. But 1000 rupees is not going to change. Even nowadays, when I go to the Christ College, previously we used to do the wealth management full course of 40 hours. And I used to realize that their pocket money is much more higher than the somebody's salaries also. And I used to tell them, why don't you do that? So they will say, no, 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 it is too less and all. And I said, if you are not learning the skill now, you will never learn it later. But in contrary, I was coming recently last 10 days back with one of the taxi, and I have a habit of, I always believe that the best knowledge you get it is from the drivers, even abroad or India. So I was just speaking with him and I said, how are you, what's you do and all this stuff. And he was explaining me, and I feel he is one of the richest person than whom I met, because he says, I just earned 30,000. Out of 30,000, around 10 to 12,000 he give it to the old age home. According to me, it is almost like a 40-45% of his income. He goes and spend around 4 hours to take care of them, to take the things, and still he save around 4,000 rupees. And I was amazed with that person. I was telling Anil, I have never seen a person like that. Maybe he is not rich in the portfolio, but I feel he is the most richest person, that somebody is giving 40% and still he is saving and he is able to manage with happily. So sometimes when you speak, you see around it, people have been saving. This is another things. My mom and dad being very old, I normally spend around 10 odd days in a this hospital. And I was speaking to one of the nurse there again, because you become a quite friendly with those staying there for 10 days on. So I was asking how you invest, what you do, and how much you earn and all. So they was trying to say they take care of your staying and food and everything. So she said, actually, I'm very new. I get only 8,000 rupees. So I said, okay, that's nice. But I was feeling very bad. So much work they're doing, full 12 hours and 8,000 bucks. And she says, no, I'm able to save 5,000. And that's another thought process came to me, that we keep trying to say that I am not earning enough, I don't have a money. But when you go and speak with people, it's just a behavior makes a person rich or poor. It is the discipline of a long term planning. Goal achievement comes just a power of compounding when you start investing daily basis, a monthly basis, or regularly, whatever it is. Try to do that. You don't need a more and the big money. Start with small as 1,000 bucks. So that is a very, very critical. The discipline is which is the most important in investing, in a not accounting or economics or psychology. This is what Howard Marks says, and I do believe it in that. And thanks to my dad being an army person, very, very disciplined from the day one, and I have been doing for last 26 years my investment, and I can bet you that the power of compounding. What sometimes when I have seen my own portfolio, I was telling, I went to the Anil, my husband, and I said, is it my portfolio? I don't believe it. It is so huge. Yes, then yeah, it makes a lot of difference, because when the market is down or an up, I don't have to worry about it, because my goal has not come. My goals are kids' education or my retirement. Nothing has come. So why worry? Continue your investment and get the power of compounding and averaging. So this is the another myth which I always say, is that you can easily take care of this myth, but don't worry about what is happening, how much money I have. Just do the SIP as small. Some of the micro SIPs are there, which is 500. But I always say start with 1,000 bucks minimum. But indirectly, I keep saying that I have been doing 25% of whatever income you get, you should put for the investment, not for saving. Saving doesn't give the returns, but I mean the investment. So previous to this session, there was an entrepreneurs woman around, and they were saying that they normally keep it in FDs. And I was trying to tell them, see, the FDs, if you are in 30%, you will be actually eroding your money. So there is nothing I can say rocket science about the advisor or something like that. It is talking about what we look at. So we try to see the funds which is post tax, post inflation is always greater than zero for the longest time. That is what we have to find the concept is all about. And if we are able to take care of those concepts, you are creating a good wealth. So that's the one thing. Don't erode your money. Try small and continue your investment till your goals are achieved.
Almost all information and literature you seek about various investment products is available on internet. Then why do you require the financial advisor? In the war of Kurukshetra, Kauravas had the best warriors and bigger army. Even Sri Krishna gave the Narayani Sena to them, which was never defeated by anyone. On the other hand, Pandavas had smaller army. Still, they won the battle because they had the right advice from Sri Krishna at crucial times during the war. Similarly, during the uncertain time, it is the right advice which is more important than any other information and literature. To achieve your financial goals, it is very crucial to choose the most ideal investment product from the wide range of products, and therefore, it is advisable to take the help of the financial advisor. Right advice from financial advisor helps you to stay away from the emotions and also encourages you to stick to the most logical way of investing so that you can easily achieve your financial freedom. Always consult financial advisor before investing.
So this is the very nice stories coming in my mind. One of my friend, they were having all of us, to give you my brief. Actually, I worked in Wipro and Infosys for around 14 years. So I have a lot of friends in IT side. So she was having a lot of backache because we all worked for so long, normally sitting. So she went to the yoga for around 6 months and she told me, Rachna, my backache is becoming all right. And whenever I go for yoga, almost same what you call poses I do it. So now I am very aware of why I should spend money in monthly basis to go there and do the yoga. I said, fair enough. If you know what you have to do it, please go ahead. So 1 month over, 2 months over. And after 3.5 months, she called me again and she said, do you know anybody, a doctor who can take care of my back pain? I said, what happened? You were perfectly doing fine and all 3 months back. Suddenly you are getting a backache. So she says, no, now I realize it. Actually, when I first few days I did regularly, then I said I started missing 1 or 2 days. I said, okay, I'll do some other day. Then after some time, it happens to me that I don't know if my posture is right or not. Then I realize it is the right time. So I should go back to the person who can tell me that what I'm doing is right or wrong. And then, of course, she went back to the same yoga teacher and she continued and she's been having an healthy backache. So sometimes it happens that we started feeling, and especially when Google has come, so I keep teasing people, okay, this is a Google doctor or a Google advisor and all. It's nothing wrong in doing that. But make sure you are not attaching emotions on that. Because when we do about our own money, we add an emotion. If you're able to cut it off that, it is always good to do yourself. Otherwise, try to find it some other person who can help you out and make sure that you achieve your goals with peacefully. That's the best part of it, and you will have the best of sleep. So third part is equity can earn quick money. This is the all-time questions I keep getting whenever I get a especially young kids. I can say my daughter is in 20 years old, and when their friends comes, the first thing they ask, auntie, tell me how to make the double the money fast. And I keep jokingly and say, because I keep joking that so they don't mind, but that's a fact also. I said, if I knew how to make the quick and double the money in 1 year, I must be sitting next to the Ambanis and all. I won't be sitting next to you. So this is why not somebody's made 2x, somebody made 3x, somebody made 5x. So what one day one guy came to me and he says, Rachna, I have earned enough and all this stuff. If you're not able to give me 30% returns, I don't think so. It's the right thing. So I said, fair game. I think so. I'm not the right person to give you 30% return. But for your sake, can you give it to me, your capital register and all the transaction? I will do it for you XIRR, because the worst and best part of what any DMAT, nobody gives XIRR. They just give the holding and the returns on absolute. Nobody gives till date also. So I got the details, and you will surprised to know that most of us remember only the stock which is given the positive. They never remember, and he was less than 10% returns. And he became one of my good customer also, because it is always thought ki, okay, it is giving me a quick return. And I said, being Infi and Wipro, who have always, I'm talking about 94 batch, so we all got the best of ESOPs and other things. Of course, all of us has made money. There's no doubt we not made a money in equities, even in ESOPs or a mutual fund or anything. But the thing is, you have to stay long. You have to give a patience. You have to make sure equity do a compounding. Otherwise, you will not able to earn money. So this is the everybody know about Nitin Kamath, that he owns the Zerodha, where they are the number one in India where people are trading, and he himself has written that most of the time, if you see, the traders are the people who lose the 80% of the time losses. So it is very, very high. You can see the people have done, they have done the another survey also, that people actually don't make money. But this is the mindset people have, ki if I trade, I will make more quick money. So how to overcome this myth and the things is, stock market gives a good attract, and that's why forget it anybody, my son who is 14 years old and telling me, mama, you go to the YouTube, this YouTube is 4 million people have seen, 10 million, how to make money, quick money in 10 days, 20 days, 15 days. And he lost, of course, money, because I want him to learn on the crypto around 15,000 from his pocket money. That, see, people said that, and his friend told, and of course in that teenagers he feels that the friends are always the best, even though we are, so she, I'm assuming that everybody thinks that mother doesn't know anything, and he told the same, mama, you don't know anything, so let me go and all. And I told Anil the same thing, let me give him this money and chance to realize for lifelong that what people say or people do doesn't happen. He lost it, the money, and he has been telling, and even I have seen the YouTubes and others, the number of viewers goes very high for the, where people say you make the money in the double the money in 7 days, 20 days, 100 days, whatever or thing. And I keep telling her, one guy came to me with a pamphlet saying that I'm going to teach the trading to you, and you can start making double the money in a year. And trading learning cost is only 7,000 bucks. So I asked him simple question, if you are able to double the money every year, why you are giving training in 7,000 bucks? You must be earning maybe in 7 million billion money. So sometimes we have to understand the concept for it. It gives a quick money. It gives a compounding. It gives a good money. But quick is not as quick as people think is 1 year, 2 years, and 3 years. It has happened last 3 years, no doubt about it. But when you talk about the equity, you should talk about longer term. I have been very choosy to take customer than actually not people. I may sometimes feel, is it something is wrong with me, because our funds are being performing extremely well. They are top two, and they are saying they are giving 30 to 40% return. Please, Rachna, continue and give me the fund. And I said, no, you are looking only a short term returns. On an average, you should look 12 to 14% returns on a large cap side, and the mid cap side is around 16 to 18. If you still think it is you want bigger, so I am sure you have a many more people who can give you the different funds. So I believe that what I it's a more realistic to do that. Similarly, I wanted you also to learn that stock market gives very good returns. Stay safe, stay long continuously, and you will make money. But don't go into trap of quick money, FNO money. We have seen people losing money. They have to sell their houses to take care of FNO calls and all, because that is much worse than a normal equity also, because you have to clear on a every month basis on a Thursday. So this is the what I am been trying to tell. Don't go into the emotions influence your thing. And Smriti's friends also now have told them they have lost whatever money they have done it. So I keep saying, I remember my mother when she used to tell that, no, 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 this is like a hobby, or you can say it's like a jua. Everywhere, if you get it into and you go into the issues, and then it go into the trap again and again and again. So for anything, it's like when we do it in a PMS, we always have that feeling very clearly. We may also go wrong, but when to do a exit as a loss and when you have to exit as a profit, you should be very clear yourself. So there is I am in a part of 3 to 4 Sensex group and market group, even though I don't track on a daily basis. I just read quite a lot of data. And somebody asked me, the best and worst part of all the people, I don't want to name some few people. They says that they tell when to buy, but nobody is telling me, Rachna, when to sell. And that's why my portfolio has gone down. So I said that is true, because in equities or anything, you make money when you sell. It's not when you're making buying. Of course, buy makes a lot of difference which market you have taken. It's a low or a high. But sell is much, much more important than a buy. That's the one thing we have to realize, to find it out who can help you out to say that when to sell. Okay. So this is a smaller one because it is last 2 months, it is having a very roller coaster, right?
Investing in equity market is just like riding a roller coaster. In roller coaster, after going through so many scary ups and downs, we finally get the amazing experience of fun, joy and happiness. During these speedy ups and downs, we might get scared, but we did not jump out of it even though we feel the fear. Being seated is the safest option till the time we end up with our ride. Similarly, we can create a great wealth from the equity market only after passing through lots of ups and downs. Equity markets can correct due to many reasons, and feeling of fear is natural during such market corrections. In spite of fear, it is always advisable to stay invested for a long term. During 2003 to 2007, Sensex faced many corrections before it went up from 3,390 from 1st January 2003 to 20,286 on 31st December 2007. During such corrections, whoever does not let the fear overpower the logic of long-term investing can create a great amount of wealth. Invest your hard-earned money in equity market through mutual funds for long term with the help of proper advice from financial advisor to create wealth for you and your family.
So this is the third one which I was trying to last 24th of March. This I'm sure if you must have got it, few infographics and all. How 24th of March 2020 the market was gone low at 7,800 something, and now we are almost touched even 17,000 plus. So sometimes, of course, in 2 years people have been getting amazingly good returns, but don't think that past 2 years returns will define you that next 2 years returns also. So this is the another one which is leads from third to fourth. Most of us, anybody, when it comes to me, I ask them, if you are investing, how you investing? So they say that I have gone to the net and try to find which fund is ranking good or a past performance. So this is like I always believe, when we are driving a car, I'm sure none of us will drive the car with a rear mirror. At least I will check the rear mirror if somebody is honking me quite a lot or I wanted to take over. But otherwise, you always use the front mirror. So this is the same thing. Even though it is like you're somebody having a cigarette, it says it's injurious to health, but they still have the cigarette. So similarly, if you go and see any of the past performance and the ranking, they always says a disclaimer, but nobody reads it. So when we are doing as a ranking, I'm sure others also must be doing advisors. So when we do it, we try to understand the fund manager. What is his views? His views are going along with us or not, because that is very subjective. And fund manager is the driver of that car or the fund. It's not the past returns. So most of the time people do this investment on the past returns, and then they get into a trap, and then they says, no, I am not going to invest in equity, I'm not going to invest in a mutual fund or something because it went wrong. This happens to me maybe a month back. A person who is an ex-banker, she's 72 years old, came to me and says that, Rachna, I do FD, my FD is maturing, my tax is going so high. So I have gone to my bank where I was working, and they have shown me some fund which is giving around 32% return. So I have done it, and they said you will get 32% return. And I'm very surprised, the person who doesn't want to take risk for 30 years, she's been doing an FD, and suddenly she is looking for 32% return. So I was trying to explain that, auntie, very in a simpler way, you may get 32, but you may not get it. No, my person has told that 32% return was there. And I said, he's not telling lies. But last year, it's not necessary this year also. But the feeling what I received it is people just take that past or the recent investment performance as for the future. This is very, very different. Please don't do it, because I'm not saying they are wrong, but you have to see what data you're looking. If you're looking ranking or you're looking past performance, look for long term, 3 years, 5 years. You look when the market was off or is down, how that fund was doing good. So if you don't know, find it out yourself, ask somebody, but don't look only the last few years and then take care of those part of it. So this is a few examples I wanted to give you, that investing based on the online portal. So this happened on 26th April. If you see, this is the all the rating of Franklin Templeton was a 5-star hotel, 5-star funds, and all of them has gone into an issue. So people have still 80% people have got it, and around 20 people percentage still is going to get the money. So it's not necessary what the online portal is doing is right or wrong. They also giving statistics, but disclaimers people are not reading. So you don't have to go always on a ranking and the performance. So this is the another best slide, I always like it, which is talking about comparison of 3 consecutive years. So I'm just taking the last line, the funds which was at top 3 years consecutively, 2014 to 16. The next 3 years, that fund is at 230th rank out of 238. You can think of how if somebody has invested on the rank on top 5, they are not even in top 15 the next 3 years. This is the one thing I'm going to say, because your sector change, the asset change, everything keeps changing. So the performance of the fund, what is good today may not be good tomorrow. So you should have somebody who can keep tracking the underlying and helping you out what to exit and where to enter. So this is what I was trying to say. That is about the mutual fund. This is talking about your multi-cap funds, how these funds, every time this color coding, if you see, it's not there the same ever. So fourth, and I can say very powerful learning for us is, don't go only just as a past performance and the ranking, because those are the, of course people are using AI and people are doing a better thing. I was talking to another customer who was in a UK base, and she says, Rashna, in UK the advisors are very costly, so we have to go about these app based, and then we realize it's not going anywhere else, so we want you to take care. So I was just trying to say, it's a history repeats, no doubt about it, but historical trends also there. But when you have to look at past performance and ranking, you try to see how is the fund managers are doing, how the long term it is taking, what are the different ratios. Make sure that person always try to tell you that if the things are not doing good, I should be able to exit it out. Try to do that. Past performance and ranking should not be the only reason you should buy any of those funds. Last but not the least is talking about low risk funds are the best bet. So being, I'm sure all of you agree, this time I was only feeling this is too much of Women's Day came, or because they were last 2 years nobody celebrated, that's why it came so many. I have done it's like nowadays it's not called Women's Day, it's called the Women's Day month only. So as I told you, 5 to 6 I had another Women's Day webinar before this webinar. So lot of time, of course, by the nature they are not a risk taker, but every time I was speaking to the person who is awake president woman, and she was telling that now we don't understand. If you tell me that if 100 rupees I give it to you, you will give me 106 or 130 after 5 years, I will take it across. I said, okay. So the low risk funds are always best bet. This is our thought. Of course, it worked wonderfully well when our parents were there, and I can say maybe a few years back when FDs and other things were giving 9 to 10% returns. But now, if you see, as I told you that auntie, I have so many old people in a range of 70 to 80. who has never invested other than an FD has started moving out of the FDs because they said, I'm paying so much on my taxation and I'm not able to survive even 3.5%. So the low risk funds are not always a good bet. Yes, but there are many low risk funds which are giving you guaranteed monthly income, pension, PF, PPF, bonds. They are good. We should have a low risk funds. We should keep our debt and equity good ratios. We should take it, but not always all. Don't put all the funds in a debt funds or something. You should have a good combination of a debt and equity. Do 100 minus your age into equity and the rest is a debt. When you're doing your portfolio, do 5% on the gold also to make sure that's a good diversified. But have a good combination of equity and debt. When you're working, try to take a more risk because I am not adding into this, but I'm just telling you facts because most of the time I have seen people started seriously investing by early 30s or late 20s. So by 30, 35, they have to take care of their full house and EMIs and the kids and everything. And now everybody is telling me, Rachna, 55, I want to retire. And if I am trying to save from 35 to 55, I'm just investing 20 years. But my retirement age is from 55 to 85. I have to take care of 30 years. So you have to realize it how much money as I have to create as a corpus where money works for me, I don't work for money. And that is the one thing you can create only when you stay long and create the good wealth part of it. So this is the another things which I have been telling across. PF, PPF, FDs, insurance are the good bet to take care, but it cannot take care of all the financial goals because we have a lot more better aspirational on our goals. To tell you few trends nowadays, people's kids wanted to go undergraduate abroad, which is around 1.5 to 2 crores. Even the PG is coming 40 lakhs. If it is medical in India itself is coming more than 1 crore. So how we can create those kind of values. A lot of people started saying Rachna, vacation is a mandatory. Before I used to think that when you have money you do a vacation, otherwise you take a vacation close by where you can do. But abroad vacation, an average of 5 to 10 lakhs people are asking on a yearly basis. These are the aspirations where we are doing. Just think about it. Nobody must have thought about that we will have an average mobile of 30 to 40,000 rupees. So things are changing more than inflation. Our lifestyle has increased quite a lot. To make sure that we continue that lifestyle, we should have a compounding effect. So look, as I told you, after tax and after inflation, how you're taking care. That's the best part of it. Just an example on an FD side. So these are the takeaway. As I told you, be disciplined in your investment. Don't carry it away from the market to tempt you to go opposite. Disciplined investing will help you to take care of the market volatility. Start early, have a power of compounding. Taking small step is very, very important to achieve your goals. Whenever you have a goals, tag the investment to that. I can bet you will never redeem it. For example, I know I'm doing this 10,000 investment SIP for buying a car. I will never remove the 10,000 because I know if I remove it, I will not get the car. Same thing, equity, earn quick money, of course not. Have a goal focus, kids education, retirement is long term. Very good to have equity on the long term. Have patience. It's like I can say it's a money tree. You takes times to grow and give you year on year returns. Past performance are the good indicator, but not always. Try to have a different things to take care of how the market cycles are. Take a systematic level. Try to understand the fund managers. Low risk is good to have a debt equity ratios. 100 minus age should be the equity. Look at post tax, post returns by to achieve the financial goals peacefully. So with this, I end up my session and I thanking you for attending. So I'm happy to take any queries now. So if you have any FAQs, I'll be happy to answer it. Sanjay, is it any questions has come?
No, not yet. We have, one feedback. Someone said that when you were talking about the tax, someone said that
Yeah.
similarly, my advisor said 30% tax on FD. Now my equity is lost 11% in 4 months.
So he was sharing. Thank you for sharing your experience that help us. What should be the strategy in the present conditions? It's good. We believe that we are going to have a multi-bull run equity quite doing very good for the next 10 years, but it's going to be volatile in the soon. So try to do a good SIPs and or STPs if it is one time. We feel that mid and small cap has already taken a little bit of good returns. So the long run, mid and small may not be doing good. So try to start going back to the large and multi cap. Every time there's another trend which I was trying to tell you all, it works wonders when you're doing. A rate of interest will go up. So bonds are doing very good if you want a debt. Government bonds, our yield is giving around 7 to 7.25. Please buy bonds instead of your FDs. And lot of time guaranteed income plans are coming, which is tax free around 6.5%. So 6.5% tax free is equivalent to your 9.5 to 10% return for 25 years. That's another way to look at in a debt side. Yeah. Let me see what should be invest in the large cap ourself SIP. Yes, I believe that's the best part of it in a SAP. Do the SIP on the large and a multi cap. Bonds, there are bonds. By the way, very few people. I was speaking to another uncle. He is also 68, I think so, and he keep doing an FD. He never knew about bonds, and he thought that bonds will come only at maturity. So I was explaining him that actually bond market is much bigger market than the share market. So it is tradable nowadays. Only thing is, if it is tradable, you have an interest rate risk coming because it may go up and down. But if you keep it till maturity, you're sure you will get the same yield. Okay. So if you wanted to keep like an FDs for a long, so you can keep it till maturity, you don't have an interest rate risk. But yes, liquidity is there nowadays on the bond because those are tradable. And I can't tell now anything. Nowadays, bonds are, you can just find it out on a government bonds because it's a daily basis changing. So if you write it to me, I will able to tell you what is that day's bonds available. Guaranteed issues plan is 6.4 of 30 years. Nowadays, it's so many different things has come. I believe that you have to look if you are looking for PF, PPF, and everything is 15 years lock in. Same thing works here the same. You pay for 10 years, get 25 years. You pay for 12 years, you get 35 years. So there's so many different options has come in those guaranteed plans. But yes, it is very good. And that is the one of my, I always believe that's the best part, at least for me and Anil. Whatever we recommend, we always buy ourselves. And that's what we have purchased. And it has been amazingly doing good. It is ICICI balance advantage fund is good. Yes, for a balance advantage, it's good because it takes care. It's like a hybrid fund. It take care of a debt and equity within the fund itself, and that's been doing good. Vinita has said Vanita is investing in NPS advisable 100%. It give you the tax benefit over and above ATC. I'm assuming you are taking a old regime. If it is new regime, you cannot show any deductions. If it is old regime, yes, NPS will help you out. Old regime, please take it across if you have a deductions and especially if you have a home loans because that will be a profitable.
Ma'am, you missed one question in chat box. Someone, asked, are balance funds good?
Yeah, so balance funds are always good. So what I didn't put it here actually because I was talking about common mistakes. What we do it, we try to say if your goals are within 0 to 3 years, we go for a debt funds. If the goals are between 3 to 7 years, we go for the balance. Above 7 years, we go for the equity. So balance fund is good because we are saying 70% in equity and 30% in debt. So depending on the duration of the fund you want to keep, the balance fund is always good. But yes, when we do SIP, if somebody today morning came and said, Rachna, I want a 50K SIP, I have normally we give one small, one large, multi, and then one balance and a one debt. So normally we give it across all those funds because it's a good option to have the balance. So there's a difference in balance fund and you can say hybrid balance funds, because that will be taking care of a static versus a dynamic debt and equity. Of course, ICIC, somebody wrote it to me and I said it was very good. I do also have those. SBI Magnum Child Benefit, good or not? I'm assuming you're talking about the mutual fund, or you're talking about the insurance. So it's an insurance mutual fund you're talking. Yeah, so that's another good funds. I always believe, but of course, now, when I was speaking with few parents who is having a kids, they felt it is not okay. But of course, I have also done like a similar one, HDFC Child Gift Fund. The good thing is in that is it is lock in till you're 18. They are the lock in funds, and it is a good because you're doing for the kids. But they says the money goes after they're 18. You may create a PAN, and the money goes to their bank. So somebody asked me, Rachna, how I know that that kid will give it to me money, because kid has to sign it. So I was telling them, then you have to just trust your kid, because you're using that money for their kids' education. So a lot of time, very surprising to know that they said, no, that age peer group is too much influential. So I don't wanted to do that kids, even SBI, Magnum or HDFC kids come. There are only 3 kids funds. They didn't do it. But yes, those funds are good because they are locked in for long. So they're, even though they are the balance fund, they give a very good returns. Please guide me, HDFC what's it? Sanchay Par Fund. Am I right? What is, I'm talking about Sanchay here. I don't know the name because it's written Galaxy 2. So please write it to me. I will do it. Is it better to sit on the liquidity for a couple of months or a minute? This is a very nice thing. One of my friend, and he says, Rachna, I know the market has gone so high, so I'm sure the market is going to fall. He's talking about October 2020, if I'm not wrong. Okay. And he stopped all the SIPs. Okay. And he was having very decent SIPs and all. And I said, see, I am doing a SIP for 26 years, and market is that this time it has just fallen 37 and then gone up and all this stuff. So you don't worry about it. That's the reason for SIP to take an averaging. I spoke with him yesterday, and you will surprised to know that opportunity cost was in multiple lakhs. Okay. So please don't time the market. We all are not God. We cannot time it. And when there is a statistic says that when somebody want to time, less than 5% people are okay with the timing. So it's a better is to do averaging and get 1% less, because we may not be in that 5% to time the market. Please do it. Do STP if you want. Somebody give it to me, any money, even more than 1 or 5 lakhs. I do the STP over 3 to 6 months or 1 year. If it is more amount, I will do till 1 year. Do averaging, but make sure don't make it idle. Yeah, so Sanjay, it's been going quite high. You can tell me where I stopped it. I think so.
Yes,
Answered
ma'am, we
about
have,
SBI. Investing in second home property. This is the Galaxy person who's in Galaxy. Join. Can you tell me your name? I don't know. I will be able to answer better. But yes, second home is the another trend changing after COVID. So what is happening? The trend says that nowadays people don't want a fixed assets. Fixed assets are moving to the financial assets, because so many customer coming and telling me, Rachna, now my kids are gone abroad, they're settled there, they may not come and take care of it. In COVID, I have not even getting the rentals, even commercial rentals are not coming. And most of the person has taking a second also with an EMI. So it is creating a lot of things. So very, very rarely people nowadays do, because even an average of 50 to 70 lakhs house, you may not get the rent more than 30 to 35. And if you take the yield, it is not crossing around 3%. So it is nowadays not feasible to go for the second house unless you have your parents or somebody else is going to stay there.
ma'am,
Yeah.
1 more minute, then we'll wind up. We'll share the email ID and phone number, so you can reach out to us.
Yeah.
So you can continue for 1 more minute.
As a PSB employee, many advise me cannot invest in a equity. Kindly guide. What is PSB? I'm not sure, Himanshu, if you can get back to me, I'll be able to help you out. But yes, people who cannot stock it. So I know all the B4 like AENY, Goldman Sachs, and all those customers they cannot do because they handle their internal data. That is the reason they don't come under the stock to be taken care of. So otherwise, most of the people, if they are not in a CXOs, so they will say that there is a silent period where you can buy or not. So if you can give me exactly the details, I'll be happy to tell you. Speculations happen on FNU more, not on the equities, so it should not have been. So please guide about the banking, etc. fund investments. I'm not sure this question. What you're saying is the banking sector, you mean? We normally don't give recommendations on the sectors or the stocks, and I'm really not good. I can tell you, I'm very good on the how the I can say overall wealth management works, how I can make sure people achieve the goals. But I don't track the stocks on a daily basis. Anil Rego, who is the fund manager and CEO, he with his team does it, and they do the sessions on the alpha stories and the markets. They will be the right person. But if you can give me the mail, I will be happy to take you to the research team and tell. Himanshu, you have put the hands up. You can unmute and ask me the questions. So till he is answering, let me take Nupur Gupta. Starting first investment on my kids thing, or Tarun or SSY, which is better? I'm saying Sukanya Samriddhi is SSY, and I don't know what is Tarun actually, Jeevan thing. So I always believe I have done for my daughter and son, they are 20 and 14. I always tell take one insurance which will take a waiver of income. It means that if something happens to me, they will get the lump sum money for their education. And as somebody says, SBI Magnum or HDFC Fund, I have been doing SIP for them. So created a good corpus when they are around 18, they will have a 40 to 60 lakhs to take care of those. Of course, in our mind, we have make sure that graduation will be done in India. So most of the time, divide into two parts. Don't take everything into the debt because you may not be able to create a good wealth when they are 18. Please guide us about the second in Navi Bombay. I am not so good in a Mumbai side also. Please write it to me. I will put it to our research team and I'll get back to you. I've yet to open a DMAT account. Please suggest the ideal one like ICICI, Zerodha, and others. Personally, I have not, because we are not allowed to open also DMAT, being a fund manager as an Anil and me as a director and compliance manager, but I don't have it. But I personally feel which you feel very comfortable, you should open. When you see the, I think so, the disclaimer, I think so, the number of per stock or per transaction wise, the cost seems to be same, even though people call it's a Zerodha or ICICI. I was very surprised. Somebody says I have to pay 15 rupees per transaction, and then when I calculated his actually cost is gone mind boggling. I was not even aware of that it meant so much because it's small number. People don't realize that how much, and they do on average 8 to 10 trades also per day. So please try to see how you are trading. You are trading in a large number, or you're buying and keeping, or you want somebody to help you out. So like a ICICI, I know people do have an RM. They call you, buy, sell, and other things. Zerodha doesn't have that concept. They believe that do it yourself kind of concept. So every platform do have some do's and don'ts. Do some research. If you want specifically on something, write it to me. I'll try my team to tell you which platform is good to do it. Talking about banks, as I told you, please write it to me. I'm actually not good in stocks. That's all from my side. There is nothing other. So there are four people have written about the Sanchay. So let me speak very simple way how the Sanchay works, because I have also taken the same. It's like you give 1,000 rupees. I'm just giving an example. 1,000 rupees for 10 years. It means that every year you have given thousand. So you have given 10,000 rupees. 11th year you don't get anything. 12th year onwards, you will keep getting a thousand for 25 years. It means that you have given 10,000 and you got it 25,000 back, which is guaranteed because it comes under the policy bonds. And then the last year, it's called ROP, return of a premium. So whatever 1,000 rupees you have paid 10,000, you get back the same. So indirectly, if you pay 10,000, you get 35,000 rupees. So if I do XIRR, which is, so personally I am doing this for the returns perspective, not as a sum assured kind of perspective. So I do XIRR for insurance also. It comes around 6.3 tax free. Okay, so that is the way you should look at across. And so many different funds are coming. It depends on how many years silent they have it. Silent means in between how many years they are not paying. XIRR takes care of that also. As inflation is rising over the world, as we assume equity market will consolidate in 2 to 3 years, not given returns. Not sure of the answer. Please, if you can tell me, I'll be happy. Please unmute and write, call me or tell me now. I'll be happy. Madam, if you want to invest 1 lakh in equity mutual fund, how much you can expect in 5 to 7 years? As I told you, think about 12 to 14% XIRR means year on year returns. What we have learned in 10th or 8th standard, no, power of compounding things. So that's the way it works. 12 to 14% return is a very reasonable in keeping in 5 to 7 years. So I'll take last one questions now, and I'll be happy to
Speak, madam.
have it one-to-one anytime.
Yes, madam. I asked that question since inflation is rising throughout the world and India crude oil prices are also rising. Is it safe to assume that for the next 2-3 years, Indian equity market will consolidate and not give returns? I'm asking because if I take 2 to 3 years horizon, I say that 2 to 3 years I have time to build portfolio when the market is consolidating. So I'll not do STP. I'll do SIP for 2 to 3 years because the market any which ways in the next 2 to 3 years is not going to give very handsome returns because inflation itself is high. This is my question, madam.
I will put another way around. See, as on today, I don't know it's taking 3 years to consolidate or not, but I can tell you over the period, the inflation will come down. As a developed country, their inflation is 1 to 1.5. We are not going to have so low as on today. But yes, I can tell you next 3 years, it is a belief that we are not going to get the good returns in equity. Keeping in a mind, normally when you take off equity, keep 3 to 5 years. Don't keep 3 years. Till 3 years, we believe debt and balance fund. So please do the, as you say, SIP. STP is also the same way. It's not that why you should not do STP. STP means you have a lump sum money, put it in a debt funds, and from that you will do a weekly STP. Actually, you will do better averaging if you do STPs. SIP we do monthly because salaried people get a salary only on a month. That's why they do it. If you do it, it will best have taken care of very well. Similar situation has come in the last 26 years I have been doing, and it has been actually doing amazingly. So just give you a little bit thought about it. A lot of people are comparing 2001 to 2008, that bull or the IT sector doing good is the same as 21 plus to 21 to 28. So there are so many parallel analysis are happening. We don't know how long this war will go or not. So it's so many things which is going in here and there. So it's better what is in our hand. So I always believe market is not in my hand. What is in my hand to continue the disciplined investment, and I do that. Why I should worry what is about others? Because my goal has not come. Please try to do what is in your hand. Leave it rest to the advisor or the market.
Thank you, ma'am.
Thanks a lot for everybody being a late night and coming and helping. Please give your feedback. session that which time zone fits you. I will try to do few more months for evening sessions. Otherwise, I'll go back to my morning session. So I'm planning as of today, maybe do 2 morning and 1 or 2 in evening. Have a wonderful
Thank
weekend,
you,
have
everyone. Thank you for
fun
joining
and
in.
enjoy.
I already shared.
Yeah.
I already shared Rachna ma'am's contact details and email ID. You can reach out to her if you have a query and if you missed some questions to answer them. And also we will be sharing recordings and feedback form. You can provide your feedback also. And next webinar we will be having on retirement case flow. So see you there. Thanks a lot. Thank you, everyone.
Thanks a lot and bye-bye. Have fun.